So what is C for?
So C is for cash flow.
Cash flow. Look, we were talking, there were so many things we could think of with C, but we thought cash flow was probably a good topic to talk about. So let's start with the small business insights that came out of Xero in September 2022, which told us some really interesting things about cash flow for small businesses in Australia.
They sure did. So in 2021, 92% of Australian small businesses experienced 1 month of negative cash flow. So if you are one of those businesses, don't feel alone.
No, that's correct. So many businesses are having cash flow difficulties. We also found that on average, Australian small businesses had 4.2 months of negative cash flow in 2021, and 1 in 5 of small businesses in Australia had at least 6 months of negative cash flow in 2021 as well.
Yeah.
And if you think about it, we also had stimulus money happening around that time too, so it's potentially got a little bit worse since that time. So how does Xero get those statistics? Have you got any idea?
No.
Okay. Well, Xero have access to all of these businesses, and so they can actually look in the background, and they don't specifically target any particular businesses, but they can see what the metrics are, and so they're actually a really good source of truth about what's happening in small business. So there was over 200,000 small businesses in Australia that were used to get those statistics, so I think they could be pretty reliable.
Yeah, well, I mean, I guess Xero does have access to a huge range of data on small businesses, so why not use it?
Definitely. So using, and I know they do have a responsible data policy, so they don't use it to sell your data to anyone or anything like that, but they do use it for these sorts of benefits for us to get good metrics. So out of that, they had 3 red flags that they could see, which was a pretty good indication that people were going to be in cash flow stress. So what were they?
So the first red flag is that payments are made late. So accounts receivable payments are made late. So half of all payments made to small businesses are paid late. So half is a huge amount, and the average is 6.4 days late. And this costs small businesses around $1.1 billion per year in Australia.
Yeah, now that's using the time value of money. So any of those of you who did economics at school would probably remember that there's a time value of money, which is taking into account interest rates and stuff like that. But clearly $1.1 billion is a huge cost to small business just purely because people are paying their invoices late.
Exactly.
What's the second one?
So the second one is rising expenses, which have increased cash flow stress. So we all know that we've got a huge amount of inflation at the moment. So annual inflation growth was 6.1% in Australia as at June 2021, which has, of course, made an impact on cash flow for small businesses.
Yeah, so the annual expenses for small businesses in Australia in 2021 actually increased 14% year on year. So that's a massive increase in just the total expense cost.
A huge amount.
And when you think about it, we've got things like not only inflation, we've also got the wage increases that are being driven by labour shortages and stuff like that. So 14% is actually higher than the inflation rate. So, yeah, not good.
No, definitely not.
And what was the third?
So the third one is seasonal shutdown. So this affects cash flow for businesses. If you think maybe a hospitality venue, they may be really busy during the warmer summer months when people are out and about, but during winter, people aren't out and about as much, so that affects their cash flow.
Yeah, it's not probably necessarily shutdowns, probably more slowdowns, but yeah, like having a think about when your income comes in. And for us, example, we've just been shut down for, the last couple of weeks because of Christmas, and I'm sure a lot of businesses are in the same boat, and that does certainly affect your cash flow. Your costs don't stop, but your money is probably not coming in the same way. So just understanding your seasonal impacts and knowing how to actually adjust to that so that you have the money ready for those periods of time.
Exactly right.
Right. So we do a lot of stuff with cash flow with our businesses, and I think one of the important things that we need to try and stress to people is the difference between profit and cash flow. And how many times do we get asked that question?
All the time. So people look at their profit and loss and go, why isn't that profit figure the figure that's in my bank account? And so the difference between profit and cash flow are the items that change in the balance sheet.
That's correct.
So Jo, do you want to explain how that works?
Yeah, so I don't want to go into too much of a lesson, but profit and loss is income less expenses, and we all know like what our income is. It's the things we sell, and our expenses are typically the things that we buy. But our balance sheet is another part of our financial statements, which are things that are our assets and liabilities. And those assets and liabilities have cash impacts to them. So, for example, if we have a loan, that is a liability to our business, but we're making loan repayments, and those loan repayments are cash flow out, making money go out, cash out. We might be buying fixed assets, and those have a cash impact to them as well, because they're a balance sheet item most of the time. They're not necessarily we're not seeing that in our profit and loss. We may see depreciation there, but there is a cash flow out when we buy fixed assets. It might also include things such as collecting our accounts receivable. We've made the sale, but we haven't got the money just yet. Holding too much in inventory. So if you're an inventory-based business, how much inventory do you have on hand? We'll talk about this in a second. And the other thing that I think is really important is business drawings for the owner, and that's often where we see people get really unstuck. How much are you drawing for your own benefit? Are you just drawing yourself a wage, which is then an expense to the business, or are you just using your business bank account as your everyday account and taking money out that probably is really business money?
Yeah, exactly. So if you are doing that, it's probably a good time to take that opportunity to make a personal budget as well.
It's that time of year. I know I've certainly been sitting down having a little bit of a look at my personal budget, trying to see where I can save a little bit of money, and understanding even just what your personal budget is. I mean, I think that's one of the big things. A lot of people just don't even know what they're spending on a weekly basis, monthly basis. What are you paying for? And how much of that is just escaping for things that you could potentially, if you're having a bit of trouble with your cash flow, cut back on a little bit.
Exactly right. And it's the little things like, are you paying for subscriptions that you're not using and things like that? And
I'm not trying to take money away from coffee shops, but how many times are you buying coffee or lunch or whatever? We're all talking about how the cost of living is going up, and everyone's mortgages are increasing with interest rates. Like, everyone's in a tight situation right now. We need to know what we're spending, and that's got nothing even to do with business. But if you're a business owner and you're using your business money to maintain the level of spending that you think is appropriate, when you don't really have that, then it's going to cause you lots of problems.
Yeah, it's just not sustainable to do it that way.
Yeah. So honestly, please just take a few minutes, maybe get yourself a glass of wine, cup of tea, whatever. Sit down and actually have a look at your personal budget. It's a perfect time. It's January. We can start the new year on a new foot. This last couple of weeks I've been bringing my own lunch to work, and that is saving money as well.
Yeah, and there are a heap of free online calculators and things that you can use as well. So we might put a link to one or two in the show notes if you want to have a look at them too.
Yeah, but let's get back to business. So we have got like the 7 main causes of poor cash flow, and we're going to go through each one of them and just have a little discussion on it. We're not going to go into it in too much detail, but have a think about how these things might impact your business. It doesn't mean that every one of them is impacting your business, but if you are having a cash flow, feeling things are a bit tight now, you really do need to do something about it. But before we do say anything about these, I think it's also really important that you have your accounts up to date. I can't stress that enough. If you're not doing your bookkeeping on a regular basis and having someone check that you're doing it correctly, you really need to be doing that. This week alone, I've had 3 clients that I've dealt with who have not had that. They've been trying to do their bookkeeping, but it just hasn't been done correctly. And so if they look at their profit and loss, it looks completely different to what the reality is, because they haven't been reconciling in the right way and posting things to the wrong accounts. It's really important you have an understanding of how to do it correctly. Otherwise, any of this stuff is not going to help you if you don't know where your starting point is.
Exactly. You need to know those figures of your business as well.
Yeah.
So Should we get into it?
Yes.
Number one. So the 7 main causes of poor cash flow. Number one is an inadequate accounts receivable process. So this is money that is owed to your business.
And so you need to have a great process in place for this. It's so important. Not only is it starts right at the beginning. When do you raise the invoice?
Yeah, I mean, don't wait a couple of weeks after the job's done. Do it straight away.
And knowing what needs to be, like even, and we've been talking about this last couple of weeks in our business. We've been on holidays for a few weeks. We've come back. Some of our jobs, so we just need one little piece of information to finish them off, and then we can send the bill out. And if we're not chasing that to finish that job off, that bill's sitting there waiting for it to actually be done.
Exactly.
So how much work is sitting there waiting to be invoiced? Let's get the work in and out and invoiced as quickly as we possibly can.
And I think one of the biggest things that we did at Jigsaw a couple of years ago was actually attached an online payment system to our invoices. So when our invoices go out, there is a big green Pay Now button that our clients can click on, and you can do the payment online.
And I know as a consumer, if I see that, I usually go and pay it straight away. If I have to think about paying it at some point in time in the future, I will probably wait or forget about it.
I'll just do that later.
Yeah. So payment systems are great. Having an accounts receivable follow-up system is really important. At what point do we start following up with our client and how? And then what do we do if it just gets out of hand?
Exactly
so all of that is part of your accounts receivable process. And I know so many businesses happily stick their head in the sand and just think one day it'll be paid.
Number 2 is an underutilised accounts payable process. So this is money that you need to pay out that you owe to other people.
As accountants, we really like you to actually have an accounts payable process. I know some businesses just pay their bills as they come in, but accounts payable will allow you to know when that bill needs to be paid. You probably, in a lot of circumstances actually have credit. So it might not need to be paid until 30 days after the end of the month. And if you're paying it straight away, you're taking that cash out of your business. So the other advantage of having an accounts payable process is to actually know what needs to be paid and not get shocked all of a sudden when it happens.
Exactly right.
So the more money you can keep in the business and pay at the right time, the better it is for your business.
Number 3 is inefficient inventory process.
Now, if you would be like, I'm sure you've had times where you've walked into a shop and it's got so much stock in it and it's like, oh my God.
You can't move.
and some of that stuff's been there, it's really dusty, it's probably been there forever and who's ever going to buy it? All of that stock that's sitting there, whether your business is a shop or whether it's a restaurant where you've got food stuff that's potentially going to be thrown out because you're not going to get to use it, it expires, or whether you're some sort of business where you're buying some sort of inventory to then on-sell to your clients, that's all money that you've spent that hasn't actually turned into cash yet, and that is a definite drain on your cash flow.
Exactly right, especially when you've just got it sitting there. And I think it's super important as well for hospitality industries when you are dealing with fresh food inventory that has a lifespan. You don't want to be throwing that out if you aren't selling it.
So having a think about your inventory process, how quickly can we get the inventory in place if we need it? Again, something you would need to work with an accountant or a business advisor probably to help you, or just use a little bit of common sense as well.
Yeah.
But the more you have sitting there that hasn't turned into cash, the more that's draining out your cash flow.
Number 4 is an inappropriate debt capital structure.
Yeah, so businesses who have lots of loans have lots of money coming out, and obviously that's affecting cash flow, and it's probably one of those things where we talk about people saying, well, how come I don't have any money but I've got all this profit? They may be paying a lot of loans. What loans do they have? What interest rates are they paying on them? Is there an ability to refinance some of those loans? Just having a good look at that and seeing if there's some way to make that a little bit better. If you're using credit cards a lot, you're going to be paying a lot of interest. There might be a better way for you to finance that cash flow shortage. Having a look at what you're spending on that sort of thing.
Yeah, I mean, if you've got 10 different loans, can you consolidate those into just one loan and help make that cash flow easier as well?
Yeah, definitely. Number 5, overheads are too high.
Yeah, so this is business expenses. So expenses like rent, electricity, wages, all of those business expenses, if they are too high, that is impacting the cash flow.
Definitely. Have a look. I mean, we just talked about the fact that 14% increase in total expenses is the norm for Australian small businesses. All right, so yeah, just go back, have a look at your expenses and see if there's anything you can do to cut costs, or is there stuff you're paying for unnecessarily that will help with your cash flow.
Number 6 is that gross profit margins are too low.
So what is gross profit? Good question. It's the amount that you make on the things that you sell. So we're just talking about inventory. You've got a piece of inventory. You're going to sell that with a profit on it. You don't sell it for the same price you bought it for. That's called your gross profit. Your gross profit margin is the margin that you're making on selling something. Now, if you're a restaurant, for example, you might be putting all your ingredients together to make something that you're going to sell. How much did it cost to put those ingredients together, and how much are you selling it for, and what is the margin that you're making on it? And I think it's always important to make sure you know your margins and you know you're sticking to them, and seeing if there's anything you can do to improve those margins. Would it be that you need to increase the price? Is it possible for you to reduce the costs on the other side of it? All that sort of stuff. So again, everything is specific to your industry, but what is your gross margin, and is it improving, getting worse, and is that causing you cash flow problems?
Exactly. And number 7 is that your sales are just too low.
Yeah, that's right. We've got to sell something to make money, haven't we?
Yeah, exactly.
So as a business, we need to know what we need to sell to get to the point that we're profitable and to meet our cash flow requirements. And how do we drive those sales? Of course, there's lots of information on that, but it's something to be thinking about. And there's obviously different ways you can increase your sales, but again, industry specific.
Yeah, exactly right.
All right, well, hopefully that's given you a couple of things. I mean, if you have got cash flow problems, I really suggest you talk to your advisor about it. Accounts, I'm more than happy to help you. I spend a lot of time working with cash flow, trying to help businesses get themselves into a appropriate situation and know where they're going. But I can't stress enough how important it is to know your numbers. If you don't know your numbers, you don't know why you're having a cash flow problem, and you won't be able to improve it. So please make sure that you know where your business is sitting.
Exactly. And sometimes it can be really helpful to have someone outside of the business actually have a look at those figures and maybe interpret them or look at things a little bit different than you would, knowing that you're working inside your business as well. So it can be valuable to have an outsider look at those figures.
And if you think you can't afford to do that, maybe you get someone inside the business who's not you to have a look at it with a different set of eyes. I know we've all sort of been having a bit of a look at our business lately, looking at all the different parts of it, as we not necessarily just from a cash flow perspective, but in all sorts of ways. But that is one thing that we're looking at. What are we paying for? What benefits are we getting out of it? Is it worth the money? Is there something we can do to save that money? And even, I think I've said it a few times, I noticed that we've been paying for subscriptions for businesses that aren't even part of our clients anymore, and no one's actually picked it up. So we've got to get rid of those. And even though they might not seem like a lot every month, when you add them up, it becomes quite a substantial amount of money.
Exactly, and everyone likes saving money, so why not do it if you can?
And if you do want to get an advisor to help you, well then ask them, maybe try and actually identify how much cost saving you have managed to get out of that.
Yeah.
And then you can see that the cost of doing that is probably worth the benefit.
Yeah, it's probably paid for itself.
All right, well, I think that's enough about cash flow. Not sure what we're going to talk about with D, but
we'll have a think about
I can think of a few topics that start with D.